I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again from Switzerland, Egon von Greyerz. He is the managing partner and founder of Matterhorn Asset Management. He manages hundreds of millions, if not billions of dollars, as gold vaults high in the Swiss Alps and in other places around the world. Egon von Greyerz, thank you for joining us today on USA Watchdog.
Greg, it's a pleasure to be back on your show again.
Well, I just want to start off with this referendum vote in Switzerland that needed 100,000 signatures, and you got it. And there's two camps, yes and no, to have gold backing in the Swiss francs and keep Swiss francs, and keep a minimum amount of gold and bring your gold back. Tell us about what's going on with this referendum, and where are we with the referendum where the Swiss are going to be voting towards the end of the month? End of next month, November.
End of November, yes. Well, this is so interesting, Greg, because, first of all, it is unique for Switzerland. This is real democracy, that people can actually propose an initiative that, if it's accepted, becomes part of the Constitution. So in this case, 3 members of parliament proposed that, number one, Switzerland should bring back its gold from abroad. Number two, that their balance sheet should be backed by the balance sheet of the Swiss National Bank should be backed by 20% gold. And number three, no further gold sales. Because, of course, Switzerland, like the UK, managed to sell more than half of the gold at the bottom of the market between 2000 and 2004, which has cost the country a lot of money. So now the way it works is that the people, you have to have a list of 100,000 signatures from people to have the initiative accepted as a referendum, and that happened about a year ago. And now the referendum is taking place on the 30th of November, as you said. So now that is so the yes camp. If the yes camp wins on the 30th of November, these 3 points become part of the Constitution, and the government cannot do anything about it, nor can Parliament. The only thing that can change that is another referendum. So this is real democracy. It does not exist in any other country in the world, as far as I know, and that's what makes it so interesting.
Well, how much gold do you have abroad? I mean, Germany basically got stiffed with its gold here in the U.S.
Yeah, no, Switzerland has, sadly, only 1,000 tons of gold, just over 1,000 tons of gold left. At the end of the 90s, they had 2,600. And as I said, like all central banks, or many who sold at the end of the 90s, they managed to time the bottom perfectly. So Switzerland now has 1,000 tons, of which 30% is abroad. Now, it is in the UK and it is in Canada. When asked, they say they don't even know where in the UK and Canada it is. Of course, it might not be there at all. Of course, they tell us that it is, but like with most countries, there hasn't been a proper physical audit of that gold. Also, one has to assume that what has happened to that gold is exactly the same that has happened to the German gold and a lot of other central bank gold that has been leased to the market, potentially sold, and therefore, Germany, as you mentioned, had wanted 680 of their gold back from the US. They have, in the last year and a half, got 5 tons back, and they've been told that the rest they can get in 2020. What does that tell us? It tells us, of course, that the gold isn't there. And it's most probably the same with the Swiss gold. And, of course, the Swiss National Bank and the government says it's safe to keep your gold abroad. Well, they don't even know if it's safe because they don't even know if it's there. And that's the sad thing today. All the gold, as you know, has been moving from west to east. And central banks are probably short of gold, or at least have very little gold left. And, of course, the bullion banks, the same in the West. Their stocks are very low.
Let's talk about the no vote in the no camp. And there's a lot of rumors around the Internet swirling around saying this is going to end up as the Scottish referendum, that, that was all rigged. I don't know if it was or wasn't. but this is going to end up like the Scottish referendum. The powers that be can't let this happen. They, by hook or by crook, they are going to suppress the yes vote. They're going to turn the yes votes to no votes, and it'll be, oh well, we had a democracy and it didn't work out. Oh, sorry, we won't know where our gold is, and we don't know who has it, and we won't ask for it back. And the elites that are running, at basically the world, including Switzerland, that's what they're going to do. What do you say about that? Do they have a chance of snuffing this referendum out and turning it to a no vote?
Well, let's first say that the government is against it. So they're in the no camp, and so is the Swiss National Bank. They're, of course, not supposed to campaign officially in these kind of referenda, but they're still making clear statements that is dangerous. It's dangerous for the Swiss National Bank to lose its powers they don't call it manipulate, but that's what they mean, to manipulate the market. Because remember that the Swiss National Bank relatively has printed more gold than any other Western bank in the world. Printed more money than any other Western bank in the world in the last few years in order to keep the Swiss franc low. So they bought unsafe euro assets to the extent of 400 billion Swiss francs. Remember that their total balance sheet is 500 billion, and that is 80% of Swiss GDP. We then take the Fed's balance sheet, which is 4 trillion against about a bit over 16 trillion GDP. It's only 25%. So Switzerland is more exposed than any other Western nation. And that's very dangerous. It's too big for the country. If you then add to that actually the Swiss banking system is about 7 times Swiss GDP. That is also too big for the country if something happens again. And it's likely that that what happened in 2007 to 9 will come back, in my view. So the no camp, as I said, are afraid that the powers to print money and to manipulate markets is going to be taken away from the Swiss National Bank. If we look at, and therefore also that the Swiss franc will be too strong, which is bad for the country. But in my view, that's absolute nonsense. Switzerland, when I started working in Switzerland in 1969, a long time ago, the Swiss franc was 4.30 to the dollar. $1 for Swiss francs 30. Today, it's $1.95 Swiss cents. So the Swiss franc the dollar has totally collapsed because of money printing and bad management. But the Swiss franc, because of very sound monetary policy with no money printing, has created low inflation, a strong currency, and a strong economy. Now, the new guard in the Swiss National Bank believe that they should do what every other national bank is doing, which is to print money and manipulate the currency. And they haven't read their history books, and the history books are not that old. 10 years ago, Switzerland had a strong currency, a bit over 10 years ago, strong currency with no money printing and low inflation, and prospered in spite of the fact that the currency appreciated dramatically, as I just said, and that's because they had low inflation and no deficit. So, sadly, they have just assumed that what the rest of the world is doing, which is destroying currencies, printing them to death, and we know that printing money doesn't create wealth, and now they're doing the same thing. And they're trying to tell the people that is the only way to manage the economy, when they have proved themselves, the Swiss central bank, that that's not the way to do it.
Let's talk about the yes vote, the possibility that the yes vote happens, that it's not rigged, that it's not manipulated, that the people's will, and right now, are they still running ahead about 45 to 38% or so? Is that still what the leanings are for Switzerland?
Yes, it's early days, but there have been a couple of polls out, and they're both roughly the same, as you say, about 45 for yes, and just under 40, 39 for no, with a few, then the rest undecided. Now, of course, some people, the pessimists, or the one or the no side, they're saying that, of course, in these referenda, early opinion polls are not really that important because it shifts. But then also, actually, the opinion polls that are more important are for the initiatives that have been proposed from the right, and this one is from the right. So this actually looks like, therefore, it could be more valid, this opinion poll. We have a long way to go. Voting starts early November, end of the first week of November, because it's a lot of votes are cast by postal votes. So there's a gradual build up the weeks before the 30th of November. So it's not a one-day thing. We have the campaign, which is the traditional Swiss campaign, which is posters and leaflets to every household. That's how every campaign is conducted. No television or radio advertising is allowed. And then we are also starting that I'm involved with is a social media campaign, which is very unusual for Switzerland. But that's a way we can reach about 80% of the 18 to 44 age group here through Facebook, for example, which is very powerful. And this is the age group that doesn't read papers or doesn't watch television daily. So this is something different, and we think that could be very, very interesting.
I mean,
go ahead.
Go ahead. No, go ahead. And so?
No, so I think, it's early to call it, but I think we stand a very good chance. When I say I am in the yes camp, I will admit that, and I am working with the yes committee also, because I think I'm a great believer in this fight for sound money and non-manipulation of central banks and non-destruction of paper currencies.
I mean, you are, if you have 1,000 tons of gold and 30% is held abroad, I mean, that's more than 300 tons. Who wouldn't want their gold back? What sane person wouldn't say, our gold's overseas? Well, we need that back. Who in their right mind wouldn't vote yes to that?
Well, you're absolutely right, and that's what the Swiss will do, in my view. Now, of course, the government and the National Bank saying, well, of course, it's good to have it abroad if we need to sell it one day. Well, first of all, they shouldn't sell it. Secondly, you don't need to hold the gold abroad if you want to sell it. They can sell it from Switzerland, and anybody will accept an order from the Swiss National Bank, and they can just ship it across the next day. So that's a ridiculous argument. And the other argument is that it's safe to have it in different places. But that's, in my view, also nonsense. Maybe that was okay during the Cold War. There's no Cold War now. But more importantly, when it comes to the Swiss people is the most independent people that I know. They don't like being told by the government what to do and how to vote. They don't like to be scared by the Swiss National Bank. So actually, the more propaganda that will come out from the government and the National Bank against, the more pro the Swiss people will be. So they actually have a balancing act, now with their propaganda, because this, as I said, the Swiss, or we Swiss, don't like being told what to do, how to vote.
And you're saying that the Canada and the UK have both told Switzerland, hey, we don't know where your gold is. What? You misplaced more than 300 tons of our gold? You don't know where it is?
No, it was the central bank figure that said, we don't actually know where it is. I don't think they have told them, but the Swiss, the National Bank said that there was a speech, someone said, I don't know where it is, the gold, he said, but I don't want to know. So probably they're being told where it is. Somebody must know where it is, but nobody can. Everybody thinks because it's held by other central banks is there. But we have the proof, in my view, with Germany and also with other countries, that they can't get their gold back because the gold isn't there. And the Swiss authorities or the National Bank or the government hasn't even started thinking or worrying about that, although they know, because they must have heard what happened in Germany, that they know that there's a high risk that the gold isn't there.
So you think you vote, if the yes vote does happen, let's talk about the fallout if the yes vote happens. Let's say yes vote overwhelmingly happens. Could that send shock waves around the world if all of a sudden your currency has to be backed by gold, at least 20%, your gold comes home, that the government can't manipulate the markets? Can that send shock waves around the world? I mean, Switzerland's an important monetary country.
I think it can because, there are, as I said, we have had the movement in Germany and the gold didn't come back. Merkel, of course, said that we're happy with the gold where it is now, although they don't even know it's there. So, So I think that more and more countries, there'll be movement in several countries to bring their gold back home, because when the market sees that, as in Germany, that the gold actually can't come back home, and that's national banks are resisting that move because they probably know also that the gold is leased out. And when the people see that, I think there'll be enormous pressure on many governments to bring it back. So I think it will be very positive for the gold market, which, as we know, has been and is manipulated to a massive extent in the futures market by governments in order to keep the gold price low. And the paper market in gold, of course, is about 100 times bigger than the physical market. And what has happened in the last few years is that gold has moved from west to east, because before, when the central banks and the bullion banks bought or sold gold or leased the gold to the market, it all stayed within the LBMA pool, the London Bullion Market Association pool, primarily in London. So central bank gold and bullion bank gold was all in London, and they shuffled it between each other. But now the big buyer has been China, of course, and China has been taking delivery of that gold. So the gold has gone from the west to the east, often via Switzerland, in order to break the 400-ounce bars down because China, like India, only want 1 kilo bars. And that we see statistics of it, that's happening. So I don't think it'll be that long before it comes out that the gold, there's not much physical gold left in the West. And of course, that will bring panic to the market when that comes out.
Do you think that happens this year? If there's a yes vote on the 30th, on December 1st, and they count the tally on December 1st, whoop, the yes vote has it. They're bringing their more than 300 tons of gold home, and they're going to find out if they have it, and they want it now. Do you think that this whole thing could blow up? I mean, the non-delivery of gold, you've been telling me that China has been taking delivery. India, Russia just recently bought millions of ounces of gold as well. Do you think this ends this year? I mean, don't they have to have the physical gold to actually control the price?
You know, Greg, I have a long life behind me and a long professional life behind me. And one thing I've learned is patience. Because we sometimes see things that have to happen, and it's absolutely guaranteed that they will happen, but they don't always happen when we expect to. I think this will happen because this is an unreal situation, and unreal situations do not last. But whether it happens on 1st of December, as you say, or whether it happens next year, it will happen, but we don't always know what the catalyst is. The catalyst can be some other event in the market. And as we discussed last time, I have never seen a world in my lifetime where we have so many potential catalysts around the world, where country after country, there is a massive problem, whether you take Japan or China or Europe or the US, and that's country-wise, and then you have, of course, the whole of the financial system is still a house of cards. No problem has been solved. So there are so many potential catalysts, and then we have on top of that potential black swans and geopolitics. So there will be a trigger that makes all of this happen. And gold, in my view, has most probably bottomed, and the correction is finished. So gold is anyway starting now an uptrend. And of course, a positive result in this Swiss gold referendum will definitely push gold higher a lot faster, in my view.
Ken, when you talk about catalyst, you're talking about a catalyst for calamity or a catalyst for reset. I mean, everything's going to reset. The gold price is going to reset. The stock market's going to reset. The bond prices are going to reset. The dollar's going to reset. The franc, the euro, everything's going to have a big reset, is it not? Is that the catalyst you're talking about that will happen?
Yes, of course. Yes, there will be a reset, but in my view, the reset will be a very disorderly reset. I don't think, of course, governments will try to organize some package with a new reserve currency, etc. But that will not last, because first of all, now, there are more and more countries are trying to go away from the dollar, and I think that the days of the dollar are counted, and I think the dollar is going to start falling rapidly in coming months and years. Of course, it already has fallen dramatically in the last few decades, but that will now accelerate. So it will go down to its intrinsic value, which is zero, which most currencies do over their lifetime. So, and of course, we have the movements in Russia, in China, etc., of alternative currencies and alternative trading currencies for commodities, oil, etc. And therefore, yes, there will be, in my view, a very disorderly reset with currencies falling. They can't all fall at the same time, but they will fall dramatically, and gold will, of course, reflect that. And I think the stock markets are in a bubble, and they will also fall. I think that the secular bull market that we've seen in stock markets is finished, and we are now going to see a very long bear market. And of course, the biggest bubble of them all, where governments do all they can to keep the bubble going, is the bond market, where we have more debt than ever, and interest rate at zero. That just doesn't add up. You can't borrow more than ever and have interest rates at zero. You can only do that temporarily because of governments printing money and artificially holding interest rates down. That will not last either. So the reset will be dramatic, and it won't happen overnight, but there will be events that trigger short-term big falls. But this is a long-term thing. But there will be one event after the other, and instead of all the good news that market has now seen for so many years, or even if it hasn't been good news, they've read good news into everything. Now we will see just bad news coming out in coming years, because sadly we are at the end of a major era, in my view.
Well, when we talk about the yuan and these currency swap setups, I'm not even talking about a yuan facility in Canada. The UK has gone on with this. Many other countries have these yuan swaps, and I know only 8% of global trade is yuan, but I'm thinking, let's say it goes up, another 12%. Let's say it's 20%. All of a sudden, 20% of the dollars, of the dollars floating around the world, which John Williams says is something like 12 or 13 trillion held outside the banking system. It's in many trillions. All of a sudden, that could be a couple of $1 trillion that people, I don't need this anymore. Boom. It doesn't have to be a total yuan transfer or changeover, does it? I mean, if they get a significant enough of a piece of the world trade, people just won't need those dollars, right? I mean, that could be a few $1 trillion that could tank the market. Exactly.
And I mean, you're right. The thing is, in any market, you don't need big sellers to change the price dramatically. It's always the marginal buying or selling that can make a massive difference. You can take the simple example of housing, for example. If one person wants to sell his house and there is not a single buyer, the whole housing market collapses, of course. And that's just based on one house. And it's the same in financial markets. If there are sellers and no buyers, the markets will collapse, and eventually governments will not have enough ammunition, or the ammunition that they have, which they're doing now in Japan, in Europe, in the US, supporting the stock market, supporting the bond markets. The ammunition that they have will, of course, be so devalued that nobody will want it. So whatever any support that they're going to try to muster in the future will have no effect. So that's why markets are going to be in a terrible state in the next few years because of the bubbles that have been created over a very long period.
You're saying it's not that they won't print tons of extra more money in the next crash. I guess what you're saying is that it just won't work. It's done. It won't work anymore. Is that what you're saying?
Yeah, exactly. Because, the Ponzi schemes, as you know, work for a while for the ones who stand nearest the printing press, which is the government and the banks. But eventually, and you can take any example of hyperinflation in the world, whether in the well-known ones like Zimbabwe or in more recent times or the Weimar Republic, eventually nobody wants the money because it's worthless, even for the ones who gets it first. And then you have all these examples of people coming with wheelbarrows of money, and nobody wants the money, but they want the wheelbarrow. And I think that eventually is going to happen also. Now, because yes, I believe always that there will be massive packages of QE. They will call it something else. QE is a stupid name anyway. But there will be money printing worldwide because that's the only thing they know how to do. And now, as opposed to or even in 2008, interest rates are already at zero. They have no other weapons in their armory, so there will just be money printing. But we know that printing worthless pieces of paper can never create wealth.
And I just want to close on the one thing, because you're over in Europe, and they just had the stress test. And over here, I'm reading the newspaper yesterday, or day before yesterday. I'm reading in there that it says, the market will shrug off the 25 banks that failed the stress test. Now, the stress test is, it's been over here has been called the feather test by financial news reporters, good ones. And 25 banks failed the ECB stress test. I mean, couldn't that cause a daisy chain of defaults around the globe, starting in Europe, with any one of these 25 banks that can't handle it, that aren't very, very financially sound according to their own stress tests?
The stress tests are devised in such a way that almost everybody passes. And the ones who don't pass, they just need a bit of marginal adjustments. That is the whole purpose of them, because they know when they do them that the whole market would collapse if they did it properly. I mean, I have a much more cynical view of the banks in Europe. What happened in 2007 and 8, nothing has been remedied. They are in the same position as they were then. The amount of toxic, not only that, but borrowings worldwide have increased dramatically since then, and the toxic debt that existed then is still there today, and I don't see. There's not a question of a lot of this toxic debt ever being repaid, in my view. So I think it's not. I think it was 101 banks in the stress test, if I remember correctly. I think most of them will be in trouble when there's real pressure. I don't think it's a question of 25. I think it's that all banks here in Europe and also in many countries in the world are insolvent, and they will not be able to pass any real stress test. These are artificial ones, but the real ones, as I said, and we will experience that in the next few years. The banks will not survive that. And of course, short-term governments will print money again, but as I said before, it won't have an effect. So we will have some real problems in the financial system in coming years. And I have to stress again, I'm not a pessimist. My job is to understand risk and to try to analyze where the risk lies. And all I'm saying is that the risks are higher than ever. And when the risks are high, you better be careful and be prepared for it, because you can't buy fire insurance after the event.
Of course, your own Swiss finance minister says that gold is a risky asset, which I don't even want you to even comment. It's so ridiculous of a statement. Gold is a risky asset. To hear somebody from Switzerland say that with your history in gold, it just to me is like, boy, you drank a full glass of Kool-Aid, my friend.
It's embarrassing. It's embarrassing that somebody in that position makes those statements without having the slightest clue what the situation really is. The Swiss franc, like most currencies, has gone down 90% against gold in the last 100 years, and it's gone down 50% against gold in the last 15 years. So which one is riskier, the Swiss franc or gold? Well, of course, it's the Swiss franc, because it's continuously going down against gold. Now, of course, they can always measure the last 3 years and say it's risky because it's gone down temporarily. But look at the trend, and the trend is so clear. The Swiss franc, like all currencies, is extremely risky, and if you want to maintain your purchasing power, you stick with gold, especially in periods when the national banks worldwide, and especially the Swiss National Bank, which prints more than any other country, especially when countries print unlimited amounts of money, you should not hold paper money. That's absolutely clear.
Egon von Greyerz, Matterhorn Asset Management. Appreciate you coming on from Switzerland and talking about this important vote coming up and the banks and giving us your analysis. People don't realize that you're you're the top strategic analyst with Matterhorn Asset Management, not just the founder. You do a lot of brain and a lot of thinking about what's going on, and thank you for telling us what you think about the markets, the gold, this referendum, and we really appreciate you coming on.
Thank you, Greg. Always a pleasure to talk to you. Thanks very much.